Hello, this is the trade site Forex Market Preview and Global Economic Data Roadmap for the week beginning Sunday, May 26th, ending Friday, May 31st, 2013, brought to you by eSignal 11 Charts as usual. We're going to be starting off here with a slow session, obviously, with the U.S. Stock markets and banks closed on Monday for the U.S. Memorial holiday, so we will not have Forex trade calls Sunday going into Monday. We will have our levels as usual. Here's a look at the dollar index daily chart. There are no counts on the seeker in effect at this point in time. We don't even have a setup phase. We did obviously have a run up in the market the last couple of weeks, but this last week was fairly flat. Let's take a look also at the daily chart of the euro dollar. Then we'll talk about some of the ranges that we saw this week, which was not a particularly fascinating week in general. You can see we came down, we got this inverted cup formation, came down near the static trend line on the euro dollar here, and we did not get to it or break it. So that still remains support. Here's the pound dollar. Same thing there. We have not yet busted that red static trend line. So nothing new to say on the daily charts. When I look at all 10 of the pairs that we cover, the Aussie dollar is the one that's approaching a potential exhaustion buy signal on the seeker. We'll take a look at that here briefly, and then we'll start to look at the intraday action. See, here we are. We're going to be 8 bars down now on the Aussie dollar at the close of this week. So we'll get to that 13 potentially by the end of next week or shortly thereafter. We'll be looking for a reversal and from that perspective. Now let's take a look here at the intraday action during the week. This is 60-minute bars on the euro starting back last Sunday, and as you can see, the total range for the week on the euro is only about 200 pips. We'll call it 200 pips. Not great, obviously, when we like to see the euro used to trade 130 pips on average per day, so 200 pips for 5 days is not really extraordinary. On the pound, 60-minute charts of the pound, you can see that it's a little bit wider range, but maybe almost 300, pushing 300 or so. So we had kind of a moderate week this week. We've got this big static trend line that we're heading back towards here on the 60-minute chart of the pound. You know, it wasn't exactly the most amazing week from a trading perspective, but certainly the ranges have been better than what we were seeing last year. For the back 4 months or so of the year, things were really, really weak. Well under 100, sometimes approaching 70 pips of range per session consistently on the euro and the pound, and we're just not seeing it quite that bad anymore. Here's a look at the Aussie, just to give you an idea. This one had about 200 pips of range as well, and you'll see the 13 sell signal on the seeker midweek was basically the high of the week, so that's pretty interesting by itself. So let's move on and take a look at the economic data that's due this coming week and sort of get an idea of what we can be expecting to have to dodge. On Sunday, basically nothing. Monday's holiday in the UK and the US, so again, no calls. We will post levels though. That night, Japan's got their CSPI number. Tuesday, we've got trade balance out of Switzerland, German import prices out of Europe, employment level out of Switzerland, corporate profits out of Canada, consumer confidence out of the US. That's a decently important number for stocks, but not really for Forex. In the UK, a speech, we've got retail sales out of Japan, MI leading index out of Australia, as well as new home sales. That takes us into Wednesday, Switzerland's UBS consumption indicator, preliminary CPI and unemployment out of Germany, private loans and M3 money supply out of Europe, Spanish 10-year bond auction. We've got CB realized sales out of the UK. We've got a rate announcement out of the Bank of Canada. US, we've got a speech from a Fed member. We've got New Zealand's building consents and Australia's building approvals. Same thing, said differently, I suppose. Wednesday evening here in the US. Heading into Thursday, which is the bigger economic data session of the week, we've got the GDP out of Switzerland, nationwide HPI out of the UK, retail PMI out of Europe, current account out of Canada, along with their RMPI and IPPI data. Second look at GDP for the first quarter here in the US. That is not a huge number, not nearly as important as the first look, which we got last month. Pending home sales, natural gas data, crude oil data. Because of the holiday Monday, it gets pushed till Thursday. Overseas trade index, consumer confidence out of the UK. Then we got a lot of data Thursday night out of Japan. Manufacturing PMI, household spending, CPI data, unemployment rate, preliminary industrial production, Australian business, private credit, sector credit. And then Friday, 1 a.m. Eastern Time, housing starts out of Japan, German retail sales, French consumer spending, Italian unemployment. The UK's got mortgage approvals and money supply data. CPI and unemployment together out of Europe. That's kind of a big point right there at 5 a.m. Eastern Time, heading into the last session of the week. It's also the end of the month. That'll be for next Friday's the last trading day of the month. Canada's GDP, and then the U.S. has core PC, price index, personal income and spending, Chicago PMI, and the University of Michigan economic sentiment number whenever the kids get up there. And then late that night, for some reason, China releases their manufacturing PMI. What I don't see here is any of our big three or a Fed announcement or a rate announcement anywhere except for the Bank of Canada or, like I said, the big GDP number. So we have a week where we don't have to dodge any of the main numbers that would lead us to go half size. We'll see if we can at least get some movement, though, this week. As usual, we will be calling it from the lab. Have a great Memorial Day weekend. We'll get back to you next week.